Why is the US dollar falling, and why is President Trump not worried about it seemingly? That's the question that is being asked right now, because the president has not just played down the concerns over the currency, he has gone a step further, in fact, and said that a weaker dollar is great, according to him. This week, the American currency, by the way, slipped to its lowest level against the euro in more than 4 years, and that has triggered a fresh debate. Is the White House quietly backing a cheaper dollar? If so, what does it mean for the American economy, and what's really happening? And what does this mean for the rest of the world? Let's just break this down for you bit by bit. First, the numbers. Since President Trump took office in January last year, the dollar has fallen by around 12% against major global currencies. That includes the euro, the Japanese yen, and others. Now, the euro has also crossed $1.20 for the first time since 2021, and that means €1 buying more dollars than before, a clear sign also of a weaker US currency. But why is this happening now? One major reason is President Trump's own comments. When asked if the falling dollar worried him, he said, "No, I think it's great," quote unquote. Markets also took that as a signal. It suggested that the White House is not trying to defend the currency. In financial markets, meanwhile, signals from political leaders matter, of course. And when investors sense that a government is comfortable with a weaker currency, they often sell more of it. And that, in turn, pushes the value down further. A third factor is the Federal Reserve, of course, America's central bank. President Trump has often criticized the current Fed chief for not cutting the interest rates fast enough. We have been telling you about this. Now, Powell is expected to be replaced, and investors are worried that the next Fed chair could favor much lower interest rates. And why does that matter, you ask? Because higher interest rates usually strengthen a currency. They attract foreign investors who want better returns. Lower rates pretty much do the opposite. They make a currency less attractive. So fears of future rate cuts are adding more pressure on the dollar. Why would any president then welcome a weaker currency? That remains the question. Because it carries some advantages. For starters, exports. When the dollar is cheaper, American products become cheaper overseas, and that makes American goods more competitive in global markets. It helps manufacturers sell more abroad, just to put this simply. Second, trade deficit. The US imports more than it exports. A weaker dollar basically can help reduce that gap by encouraging exports and discouraging imports. Third, company profits, very crucial. Many US companies earn money overseas when they convert the foreign earnings into dollars. They basically get more money if the dollar is weak, and that boosts profits. All that sounds great for sure, but there is a serious downside here. The biggest risk of course, is inflation. When the dollar falls, imports become more expensive. That includes oil, electronics, machinery, consumer goods. Those higher costs are passed on to the consumers, the tax-paying citizens of the country. People pay more in the pump, in stores, online. That hurts households already under financial pressure. And then there is another major risk here, that of confidence. The US benefits enormously from global trust in its economy. Foreign investors buy trillions of dollars worth of US bonds. And that keeps the American borrowing costs low and helps fund the government spending as well. If the investors begin to see a falling dollar as a warning sign, they may reduce their investments, and that in turn would push up the interest rates. It would make government borrowing more expensive, and it could also slow down the economic growth. Some economists are warning that this is playing with fire. Officials like the Treasury Secretary still say they support a strong dollar, but Trump's comments suggesting he is comfortable with the slide, it seems. His own economic advisors have argued that the dollar has been overvalued for years. They believe reducing its strength could reshape global trade, but managing a currency is risky, to say the least. Once markets believe a government is fine with decline, it can be hard to reverse. For now, markets are watching the developments closely because how far the dollar falls may determine whether this strategy brings growth or creates the next economic problem. To stay up to speed with the latest news, download the WION app and subscribe to our YouTube channel.